Welcome, dear traders. You are watching a recap of the Asian session. Asian stock markets were in a green following improved sentiment on Wall Street. US stocks have been rising for 4 days in a row, and shares advanced markedly amid slowing inflation. The producer price index for June also signaled a decline in inflation. It fueled hopes that the Fed could soon abandon monetary tightening, and risk assets regained momentum amid the weakening US dollar. Many currencies have already recovered significantly thanks to this factor, especially the yen. In the Asian session, many assets entered the consolidation phase. Perhaps investors decided to lock in profits at the end of the week. A decrease in the US dollar may be beneficial for some American companies. A weaker currency makes exported goods more competitive overseas. It's cheaper for multinational corporations to convert profits into dollars. Emerging markets could also take advantage of it because a fall in the US currency makes it easier to service dollar-denominated debt. The MSCI Asia-Pacific Index has advanced significantly this year. At the end of this week, its growth totaled almost 3%. The Nikkei index fell by 0.3% and the Topix index tumbled by 0.5%, losing gains from the previous sessions as investors continued to take profits after a sharp growth in the Japanese stocks earlier. Australian tech stocks scored the largest gains, and the index rose by 0.5%, logging the 4-day winning streak. Shares of mining companies also grew higher. The Hang Seng index moved up by 0.4%, growing for the 5th consecutive session. Over the week, it rose by 5.8%. Chinese stocks also showed an increase of 4.2%. The two main benchmark stock indexes ended on a positive note amid fresh US inflation macro stats. Hopes for additional stimulus measures in China gave a boost to stocks too. Earlier this week, China extended policies to support cash-strapped developers and shore up the line real estate sector. It also called on tech companies to stimulate the slowing economy. It may be a signal that Beijing's crackdown on the tech sector is over. Stocks of fast-growing tech companies were among the biggest gainers on Friday. Speculators focused the attention on the speech of the Deputy Governor of the People's Bank of China, and he said that there was no deflation in China and there were no deflationary risks in the second half of 2023. The official added that the consumer price index may decline in July before recovering in August, and the central bank has sufficient policy tools, so it will step up counter-cyclical adjustments to support the economic recovery, and traders are waiting for the publication of China GDP data for the second quarter next week. Taking into account Beijing's forecast, economic growth may be more rapid than in the first quarter. The US dollar is the main loser this week. Yesterday, it will below the psychological important level of 100 points. Traders were not surprised by this move given the falling inflation in the United States. The Fed Reserve is still expected to raise the key rate by 25 basis points in July, while traders have lowered their expectations on further rate hikes. They assume that the Fed may start cutting rates next year. In the morning, the US dollar got stuck at its lowest level since 2022, and its trajectory looked more like consolidation, and the US dollar index was trading at 99.70. Traders are now looking for new dovish signals to keep selling the US dollar. However, the hawkish comments of the Fed policymakers made them rather cautious. Christopher Waller announced 2 rate hikes this year and did not confirm the end of the tightening cycle. These statements were made during a speech at a New York university. Speculators are sure to pay attention to the preliminary data of the Michigan University Consumer Sentiment Index and the 5-year forward inflation expectations. If the revised inflation data is positive, the US dollar index may enter the support zone of 99.40 and 99.35. If the Fed abandons a hawkish stance, the US dollar will certainly decline. The depreciation of the US dollar may bring relief to some countries as they should no longer support their foreign currencies. Japan is among them, and the greenback dropped by 3% against the yen this week. It's likely to log the biggest weekly drop against the Japanese currency since January, and the yen's weakness has been a problem for Japan's import-dependent economy. Many analysts expected Japan to intervene to support its currency, and today the yen climbed to 138.30, gaining 0.3%. It maintains a bullish bias. The USD JPY pair may go below 137.15 in the short term. However, the expectations of a further fall to the support level of 135.80 looks unlikely. The resistance levels are now located at 138.20 and 138.70. In the longer term, the US dollar is forecast to weaken further. One should pay attention to 137.15. If the pair breaks through this level, it may decline to the support level of 135.80. The bearish sentiment on the US dollar will persist long as it's trading below 139.5, which is a strong resistance level. The Reserve Bank of Australia announced a staff reshuffle today. Michelle Bullock has been appointed as the next Reserve Bank of Australia governor. Bullock is the right person to lead the Reserve Bank of Australia into the future and ensure we have the world's best and most effective central bank, Jim Chalmers told reporters in Canberra on a Friday. Australian Prime Minister Anthony Albanese and Treasurer Jim Chalmers announced an emergency press conference after reports that Philip Lowe would not be reappointed after his term expires in September 2023. Bullock will become the first woman to head the Reserve Bank of Australia. Officials did not provide comments on the appointment of the deputy governor. The AUD-USD pair plunged to the intraday low amid such news, shortly after it rebounded again, and the pair was consolidating near a monthly high. At the same time, the Australian dollar also logged its first decline in 3 days amid the hawkish comments of a Fed official, Christopher Waller, and the intraday low was located near 0.6880. The US dollar consolidated on a Friday before the release of a new batch of macro stats, so the AUD-USD pair had no drivers for further growth. In addition, the pair is overbought after reaching a 0.6900. A pullback could occur. However, fresh US reports may help the Aussie to break through 0.6900, and the 24-hour forecast indicates a possible continuation of the uptrend with the target levels at 0.6950 and 0.70. The support level is seen at 0.6850 and 0.6830. The AUD-USD pair is likely to rise higher after breaking through the June peak. It could aim at 0.6950 and 0.7030. The bullish sentiment will persist as long as the Aussie is trading above the strong support level of 0.6760. The New Zealand dollar also appreciated against the US dollar during the Asian session. It notched a strong weekly gain. It was trading at 0.6411. Over the week, the New Zealand dollar advanced by 3.3%, which was the second consecutive increase. Naturally, the main reason for a rise was the expectations of the end of the tightening cycle by the Fed. At the same time, the Reserve Bank of New Zealand announced that interest rates would remain unchanged at 5.5%. The central bank also noted that the risks associated with the inflation forecast are generally balanced as supply constraints continue to soften, the labor conditions are getting better. News about the China's economy also impacts the New Zealand dollar, and China's GDP data is on a tap next week. If the indicator is strong, it could help the Kiwi rise higher, and the NZD USD pair settled above 0.6400. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon!